warehousing under customs. Listen. What is this warehousing about? Already we know while discussing about import procedures, I told you that there are two options available to an importer. They can import the goods and they can clear it for home consumption, or they can deposit the goods in the warehouse pending clearance for home consumption. If an importer deposits the goods in warehouse, what are the procedures, regulations, etc. that he need to follow is not there in our discussion so far. So this is a separate area, separate chapter. We have certain sections, section 57 to section 73A deals with the warehousing provisions. Okay, and this is an interesting topic also. So whenever the goods are deposited in the warehouse without payment of customs duty, what are the compliance to be followed by the importer? Okay, and the concept of warehouse is also discussed there. That's what I have given. First I am giving a bird's eye view. Please look into the next page. A bird's eye view of the warehousing provisions under customs. And here we have port or airport. So the goods will be under the goods are unloaded in the port or airport. Once the goods are unloaded in the port or airport, those goods will be in the custody of custodian for a period of 30 days. After 30 days, what will happen? After 30 days, if the goods are not cleared by filing bill of entry, either such goods will be disposed of or that goods can be kept in the warehouse by the customs officer for a further period of 30 days. Correct? So two options are available to the customs officer. What are the two options? Option 1, they will be disposing it off after 30 days. Okay. And yes, these videos are available in the Google Drive for CMA final students. So we are giving this to all. So to everyone. So whether you are CA final or CMA final, so it will be available in the Google Drive if you are a Google Drive student. Don't worry. Okay. So just because you asked, I want to attend, so maybe you can attend live. So that's the reason why I asked you to attend live. But it does not mean you will not get Google Drive. It will be automatically there in Google Drive if you have subscribed for Google Drive classes. Okay. Fine. Concentrate. So once the goods are unloaded in the port or airport, those goods will be in the custody of the custodian for a period of 30 days. After 30 days, the customs officer may either dispose of or may be keeping it in the warehouse. That part we know. Then, within this 30 days, we will be filing a bill of entry for warehousing. This bill of entry for warehousing is also known as into-bond bill of entry, and it will be cleared from the customs without payment of customs duty, but we need to execute a bond here. For the purpose of clearance from the customs without payment of duty and deposit in the customs warehouse, we need to execute a bond because there should be some kind of security, right, for the customs department. What if you take it to the warehouse or from there you will clear it without payment of customs duty? So therefore, there is a kind of security required. That's the reason why you need to execute a bond. Now there are three types of warehouses available for you: public warehouse, private warehouse, special warehouse. Three types of warehouses: public warehouse, private warehouse, or a special warehouse. So whenever you are importing the goods and you want to keep your goods in your warehouse, then it is private warehouse. So in a private warehouse, other imported goods cannot be deposited. The one who owns that warehouse, only that person importing the goods can be deposited in that warehouse. That is known as private warehouse. So many exporters will be having their own private warehouse so that goods can be imported and kept in their private warehouse. Only when they issue it to the production, they will be paying customs duty. Otherwise, they will not pay customs duty. You understood what I am telling? So this I have seen in case of MRF Limited. So MRF Limited in Chennai, they have one private warehouse. all imported goods will be sent to the warehouse and without payment of customs duty. Okay, without payment of customs duty, it will be cleared to the warehouse, and from the warehouse, whenever they take it to the factory for manufacture, so at that time only they need to pay customs duty. Okay, so what is the advantage here? You can defer your customs duty payment for some days. So only based on usage you are required to pay customs duty, not bulk import. Whenever you make a bulk import, on that entire import you don't have to pay customs duty immediately. So you can deposit in warehouse. Depending upon the quantity you are using it for a manufacture, you can pay the customs duty. That's the advantage. And what is a public warehouse? Sir, you can deposit your goods or you can allow any other person's goods also to be deposited. So store goods belonging to any person, that is known as public warehouse. Store goods belonging to the license holder only, that is known as private warehouse. Then what is special warehouse? There are certain notified goods. There are certain notified goods like gold, etc. Those goods can be deposited only in a special warehouse by any person, belonging to any person. And all these three warehouses are licensed by principal commissioner, and we don't have the concept of, owning the warehouse by the customs department. No, customs department do not own a warehouse. Customs department only licenses the warehouse. They do not own the warehouse. So who can start a warehouse, who can make an application for warehouse, etc., is given under regulations, warehousing regulations. Even in foreign trade policy, one point we have discussed that no 2-star export house and above, except 1-star, 2-star export house and above can establish their own warehouses. While discussing status holder incentives, I told you this, that there are 1-star, 2-star, 3-star, 4-star and 5-star categories. In that 5-star category, so 2-star and above, that is 2, 3, 4, 5, they can start their own export warehouses. Okay, and all these are specified in the warehousing regulations. So therefore, license will be given to operate a warehouse and it is not owned by the customs. Okay sir, what about the control? Public warehouse and private warehouse are under records based control. Records based, that is, so they will be asking the warehouse keeper to produce various documents, records, etc. So that is records based control. Whereas a special warehouse is under a physical control. So completely it will be under the lock and key with the customs. Okay, so physical control. Special warehouse is under physical control, whereas public and private warehouse is under records based control, whereas all these three warehouses are licensed by the customs officer only. Then what we can do in the warehouse? Can we do manufacturing operations in the warehouse? Yes, it is permitted. Manufacturing operations are permitted in the warehouse here, and then you can deposit in the warehouse. You can deposit the goods in the warehouse for a period of 90 days from the warehousing order without interest, and for a period of 1 year from the warehousing order upon payment of interest. So what is the maximum time limit for which we can deposit the goods in the warehouse without payment of customs duty? 1 year. And in that also 90 days you don't have to pay any interest. Beyond 90 days you need to pay interest. What does it mean, sir? Concentrate here, please concentrate. That is, we have imported some goods. On that goods the customs duty payable is say some 10 lakhs. 10 lakhs we need to pay customs duty. But we are not paying customs duty and we deposit the goods in the warehouse without payment of customs duty. When we deposit the goods in the warehouse without payment of customs duty, then after clearance, there is a deferment of customs duty. So because of which, so we need to pay interest. There is a deferment. Say, we cleared within 90 days. No need to pay interest. We cleared after 180 days. 180th day we cleared. Then extra for 90 days, we need to pay interest on that duty. Whatever is the customs duty, we need to pay say 10 lakhs. On that we need to pay interest at the rate of 15% per annum. You know that. In case of customs, always the rate of interest will be 15% per annum, whereas under GST the rate of interest is 18% per annum. So 15% per annum is the interest that is payable, and this 15% per annum interest will be applicable. This 15% per annum will be applicable from the 91st day till the date you pay the duty. Okay, so that's what I have given. But this time limit and all is not applicable in case of EOU, EHTP, STP or private warehouse. So EOU, export oriented unit, electronic hardware technology park, software technology park or private warehouses, there is no concept of clearance. There is no concept of clearance, okay, within the time limit. So therefore warehousing period till cleared or consumed, interest free period, no interest. Whereas in the other cases, warehousing period is 1 year from warehousing order and interest free period is 90 days. Then thereafter, from warehouse, for what purpose you can clear? You can clear goods from the warehouse to another warehouse, or you can clear the goods from the warehouse to the importer's place, or you can clear the goods from the warehouse for export. Any of these three things can be done. So from one warehouse to another warehouse it can be taken, or to importer's place it can be taken, or it can be exported. Got it here? Three things. Suppose if it is taken to the another warehouse, no need to file any bill of entry for clearance. Sir, at the time of deposit into warehouse, we will file a into-bond bill of entry, in-bond bill of entry or bill of entry for warehousing, correct? For deposit, at the time of deposit of goods in the warehouse. At the time of clearance of goods from the warehouse, we need to file a ex-bond bill of entry. But here we are clearing from the warehouse for what purpose? To deposit in another warehouse. So no need to file any bill of entry, but just a transfer request to be made. You need to make a transfer request to the customs officer. Customs officer will permit. Then from one warehouse to another warehouse we can take. Customs duty not payable. Whatever bond that we have executed initially at the time of first warehouse, that will be sufficient. Okay. Then second case. Suppose from the warehouse, if the goods are taken to importer's place, what will happen? Yes, an ex-bond bill of entry for home consumption to be filed and cleared upon payment of customs duty, and whatever customs duty, if it is paid along with interest, the bond executed will be released. Okay. Then there is one important case line in this regard. Kesoram Rayan case and SBEC Sugars case. Two cases, two are Supreme Court cases only. Kesoram Rayan case and SBEC Sugars case. Both the cases are of Supreme Court cases. What is given in that? Goods deemed to be improperly cleared on expiry of warehousing period. What does it mean? Sir, there is a permissible warehousing period up to which we can deposit the goods in warehouse. And thereafter, we need to clear the goods from the warehouse. There is a permissible period for which we can deposit the goods in warehouse. Thereafter, we need to clear the goods from the warehouse, correct or not? Now, if you are not clearing the goods within the permissible warehouse period and you kept the goods in the warehouse without payment of customs duty, the warehousing period is expired. The day when warehousing period is expired, it is deemed that you have cleared the goods from the warehouse. It is deemed that you have cleared the goods from the warehouse. That is this. Okay. Goods deemed to be improperly cleared on expiry of warehousing period. Then, next, suppose if you are taking the goods from warehouse to a place outside India, export. First of all, there is no import. When the goods are deposited in warehouse, there is no import. Why? Sir, import is not yet complete. When import is complete, only when you clear the goods from the warehouse. When you deposit the goods in the warehouse, the goods are still under the customs control. Whenever the goods are deposited in the warehouse, still the goods are under the customs control. So therefore, when the goods are under the customs control, in that case, so therefore taxable event does not arise when the goods are deposited in warehouse. From there you are taking outside India for export. Then you are not at all required to pay any customs duty. Customs duty not payable. Why customs duty not payable? Sir, where there is import, sir, there is no import. The goods are deposited in the warehouse. From the warehouse, the goods are taken to a place outside India. Where there is customs duty payable, there is no import at all. And whatever bond that you have executed will be released. But for export, you need to file a shipping bill. You are taking goods from India to outside India, ma? For that you need to file a shipping bill. Okay. No bill of entry, but a shipping bill needs to be filed. Now, what are the owner's rights with respect to the goods which are warehoused? Inspection of goods, they can inspect the goods, they can sort the goods, and they can show them for sale. But they need to exercise caution to prevent loss or deterioration and damage. So, because if there is any damage, etc., in the warehouse, then we get the abatement, correct? So we pay the reduced customs duty. If there is any damage with respect to warehoused goods, then, or if there is any destruction of the warehoused goods, then we get section 22 abatement, or section 23 subsection 1 remission of duty. For that reason, that owner of such goods should exercise care and caution while doing inspection of goods or sorting the goods or showing them for sale. Okay. So this is a overall bird's eye view of warehousing provisions. A summary, a quick summary is what I have given related to warehousing provisions. Okay. But this much is not only there. We have a lot of provisions but you need to get a clarity as to what is the flow. So for that reason, I have discussed this. Okay. So hope you understood this summary, a bird's eye view. First, the goods are unloaded into the port or airport. It will be under the custody of a custodian. Thereafter, it will be deposited in the warehouse. We have options to choose 3 warehouses depending upon the goods. Notified goods means special warehouse. Own goods means private warehouse, or any other person's goods means public warehouse. And then these are licensed, and these are under records based control, physical control, and what is the time period for which it should be deposited, and what is the interest free period. From there, for what purpose we can clear, and can we do manufacturing operations? Yes, we can clear it for either for another warehouse or home consumption or for export. So a bird's eye view is what we have seen in this. Okay. Now we are moving on to the detailed provisions related to this. Types of warehouses. We have 3 types: public warehouse, private warehouse, and special warehouse. And section 57, 58 and 58A of Customs Act deals with these 3 warehouses. Section 57 is public warehouse, 58 is private warehouse, 58A is special warehouse. Licensing authority. All these 3 warehouses, who will license? Principal commissioner or commissioner. Then control, already we know. Public warehouse and private warehouse, only record based control. Whereas special warehouse, customs log based control. That is, such warehouse is caused to be locked by the proper officer, and no person to enter without permission of the proper officer. Okay. Then next. Sir, what about the regulations related to it? So we have public warehousing licensing regulations, private warehousing licensing regulations, and special warehouse licensing regulations. Like, what are the criteria to get a license? What is the criteria to get a license is given in these regulations. Sir, is those regulations there for your syllabus? No, it is not there in your CMA final syllabus. So it's not there. So what are the conditions for getting that license? So etc. To whom that license will be given? Those are called as licensing regulations. Those licensing regulations are not there in your syllabus. Clear or not? So don't worry about it. Leave it. Then permissible goods. Sir, what goods can be deposited in the public warehouse? Any dutiable goods can be deposited where? Public warehouse. Whereas in private warehouse, any dutiable goods imported by or on behalf of the licensee. I told you. So that owner of that warehouse, if he is importing, only those goods can be deposited in private warehouse. Whereas special warehouse, any dutiable goods which are notified by board, that is CBIC. Responsibility of the warehouse keeper. So what are the compliance to be followed by the warehouse keeper is not there in syllabus. For that we have warehouse custody and handling of goods regulations 2016. So we need to refer to that. What are the compliances to be followed by a warehouse keeper? That we don't have in syllabus. Okay. Then I'm just giving you this because you need to understand what is the scope of our discussion. So what we have is provisions related to warehousing and what are the compliance to be followed by the importer. Okay. Then we have certain goods which are notified goods that can be deposited in warehouse. Not all goods, only notified goods can be deposited in warehouse. What are those notified goods? Please see. What are those notified goods? Gold, silver or other precious metals and semi-precious metals and articles thereof. Gold, silver, other precious metals and semi-precious metals and articles thereof. That can be deposited. Okay. So gold, silver and precious metals. Then goods warehoused for the purpose of supply to DFS in a customs area. Duty free shop. What is a duty free shop? Duty free shop, I told you, there are certain goods which can be imported and can be sold in a duty free shop without payment of any customs duty. Okay. So I have given that below. So duty free shop, duty free shop. A DFS, duty free shop, will be in the international airport, and as such the DFS will not be considered as a warehouse. Sir, the duty free shop is not a warehouse because generally in warehouse sale in retail quantities is not permitted. You cannot sell in retail quantities. You can execute a bill of entry and take the goods and then sell, but you cannot sell in retail quantities. But in a DFS, goods are imported and kept in a duty free shop and it will be sold in retail quantity. Okay. So that's why DFS should not be considered as a warehouse. So we are importing the goods and those goods are deposited in a warehouse. These goods are for the purpose of sale in a duty free shop in India in international airport. Then in that case, that should be deposited only in a special warehouse. Supply of stores to vessels or aircrafts. So we are supplying goods as stores. So we are importing some goods. This point we discussed while discussing stores. So some goods are imported and those imported goods are kept in a special warehouse and then it can be cleared to a foreign going vessel or aircraft as stores. So this can be sold as stores. Those imported goods can be sold as stores to a foreign going vessel or aircraft. Then supplied to foreign privileged persons. So there are some foreign privileged persons like people who work in embassies, etc. You can see below. Privileged person means a person entitled to import or purchase locally from bond goods free of duty for his personal or for use of any member of his family. Okay, for official use in his mission, consular post or officer of the Deputy High Commissioner or Assistant High Commissioner. What is that? So people who are working in consulates or embassies or any foreign diplomatic missions, etc. So these people can procure the goods without payment of duty. Okay. So due to that reason, whenever you are importing the goods for sale to these people, these goods can be deposited only in a special warehouse because these goods are for sale to a foreign privileged persons. So total 4 notified goods you should remember. Number 1, import of gold, silver, other precious metals or articles. Okay. Then number 2, that is imported goods for sale in a duty free shop in India, imported goods for supply of stores to a foreign going vessel or aircraft, import of goods for sale to foreign privileged persons. So these 4 are the notified goods which should be deposited only in a special warehouse. Okay. So this is very, very important. Can be asked as a theory question. So what are the notified goods for deposit in a special warehouse? So these 4 goods you need to write. Okay. Then a comment based question can be asked, whether a duty free shop is considered as a warehouse. No, duty free shop is not a warehouse. So duty free shop in an airport is, permission to be obtained for a duty free shop in an airport, but that should not be treated as a warehouse, because generally warehoused goods cannot be sold in retail quantities, and we need to execute a bill of entry, clear it, and then we can sell. So due to that reason, okay, you can read it there. CBEC has clarified that a DFS does not meet the ingredients of section 58A. Further, section 64 provides owners right to deal with warehoused goods, does not permit retail sales. Does not permit retail sales. Owners' rights to deal with warehouse goods does not permit retail sales from a warehouse. From this, it flows that a DFS itself cannot be treated as a warehouse. In fact, it is a point of sale of the goods which are to be expanded, correct? First, you need to expand. Expand means what? You need to file expand bill of entry and removed from a warehouse for being brought to a DFS in the customs area for sale to eligible persons. Who are those eligible persons? Some international passengers arriving or departing from India. Sir, only to them, sir. Only for the international passengers arriving or departing from India only, they can purchase from a duty free shop. That's the reason why, if you see, usually these duty free shops will be beyond the security gate. It will not be before the security gate. It will be beyond the security gate, inside the airport. So a normal person who is not having any ticket cannot enter into an international airport. Okay. So this is about notified goods here. Okay. Now we are moving on to section 58B. So 57, 58, 58A is warehouses. What are the various types of warehouses? And 58B deals with license granted under section 57, 58 and 58A can be cancelled. So cancellation of license. Who can cancel? Who granted? Who granted? Principal commissioner, commissioner granted. So they will cancel. Reasons for cancellation. Violation of the provisions of the Act or licensing regulations. So they have to comply with certain provisions. Those who got the license, they need to comply with certain provisions. If they are not complying with certain provisions, that license will be cancelled. Okay. What is the effect of cancellation? First, they will initiate cancellation. Say they came to know that a warehouse keeper has not complied with certain provisions. Okay. So then in that case, first they will give a notice, and till the pendency of the inquiry, first they will initiate inquiry. They will suspend the operation of a warehouse. That's the first step. And therefore, no new goods can be deposited into the warehouse. No new goods can be deposited into the warehouse. After cancellation of license, so once they cancel the license, okay, once they cancel the license, then whatever is the existing goods that we have, that should be transferred to another warehouse or cleared for home consumption, or should be exported within 7 days. Within 7 days from the date of service of order of cancellation. Within 7 days from the date of service of order of cancellation. Sir, what does it mean? It means that from the date, first they will initiate cancellation till the time they conclude whether that cancellation order should be passed or not with respect to warehouse. There will be suspension of the warehouse, just like our registration. So they will give a notice. In GST we discussed suspension of registration, and thereafter they will pass a cancellation order, like that. For cancellation of warehousing, so first they will be warehousing license, first they will give a notice, and till the time that proceedings are concluded, so they will suspend the operation of warehouse, means no new goods can be deposited into the warehouse. And thereafter, so when they pass the cancellation order within 7 days, from that warehouse to another warehouse you need to clear, or you need to clear it for home consumption, or you can export it. And warehousing provisions continue to apply for the goods already deposited till they are removed. Till they are removed, warehousing provisions are applicable. Okay. Then, this is section 58B here. Now, 59. Section 57, 58, public warehouse, private warehouse. 58A, special warehouse. 58B, that is cancellation of license. Now 59, warehousing bond. We need to execute a bond for depositing the goods in the warehouse, and that bond is for twice the amount of duty assessed on such goods. Twice the amount of duty assessed on such goods. That is, at the time when you deposit the goods in the warehouse, please concentrate. At the time when you deposit such goods in the warehouse, so you have to ascertain what will be the customs duty payable, but you don't have to pay that. You need to ascertain and multiply it with 2. So that much amount is the value of the bond. Okay. An importer can clear for warehousing without payment of import duty. It means that duty liability is postponed to the actual date of clearance from the warehouse to home consumption. Hence, such importer shall execute a bond binding himself in a sum equal to twice the amount of duty assessed, and such goods to cover all duties and interest, if any, payable. The Assistant Commissioner of Customs or Deputy Commissioner of Customs may insist on a part of the bond amount secured by way of bank guarantee. So that is, that bond may be backed by a security, full or part. So that will be given by the Commissioner, Assistant Commissioner, Deputy Commissioner. Then Section 60. So bond should be executed. What you need to remember? Twice the amount of duty that is assessed on such deposited goods. You need to execute a bond. Simple. Then permission for removal of goods for deposit in warehouse. Section 60. So once you file a inbound bill of entry or bill of entry for warehousing and you execute a bond, then they will pass a warehousing order. When the provisions of section 59 have been complied with, that is, bond is executed with respect to any goods, the proper officer may make an order permitting the deposit of goods in a warehouse. After such order is made, the transit of goods from the customs station to the warehouse will be made in a prescribed manner. Where to where? From the port or airport to the customs warehouse, there is a manner in which the goods should be transported. So section 60 deals with warehousing order, and section 60 says that in a prescribed manner only the goods should be transported from the customs, port or airport to the warehouse. Okay, sir, what is that prescribed manner? So that particular prescribed manner is given, one second, that particular prescribed manner you can see that in warehouse to goods removal regulations 2016. So this I have given page number 13. So warehouse to goods removal regulations 2016. Okay, so there is one notification, so that is given. So this we will discuss. So what is the prescribed procedure for clearance of goods from warehouse, that is port or airport, to the warehouse? So there is a procedure. That procedure is given in the regulations. Warehouse to goods removal regulations 2016, it is given there. So we'll complete these sections and then we will come back and discuss. I'm just giving you a reference. Okay. Then next. Then look into section 61. Period for which goods may be remaining in the warehouse. That is, period for which goods can be deposited in the warehouse. What period? It can be deposited in the warehouse. Sir, the goods can be deposited in the warehouse, I told you, for a period. That is, goods for use in any 100% EOU or EHTP, STP or warehouse where manufacture or other operations are permitted under section 65. Capital goods or other goods, till the time they are cleared from the warehouse, you can deposit and no interest is payable as goods remain in the warehouse till their clearance for home consumption. Okay. Whereas goods other than one above, that is other goods, normal cases. So we can keep the goods in warehouse till the expiry of 1 year from the warehousing order, not 1 year from the date of import, not 1 year from the date of import, 1 year from the date of warehousing order. Okay. And period may be reduced by commissioner if such goods are likely to deteriorate. They can give 3 months, they can give 6 months also if they are perishable in nature. Then, sir, can that 1 year be extended? Yes, that 1 year can be extended for a further period not exceeding 1 year at a time by the commissioner. So it can be extended for a further period of 1 year at a time. What is the meaning of at a time? Means 1 year plus 1 plus 1 plus 1 plus 1 plus 1, like that infinity. It can be extended, but by the commissioner. For every 1 year, they will do the review whether to extend the warehousing period or they should not extend the warehousing period. That is this 1 year at a time. Then interest will be payable, yes, on expiry of 90 days from the warehousing order. Okay, on expiry of 90 days from the warehousing order. So till the time it is actually cleared, we need to pay the interest. Okay. Now CBIC can waive interest under this subsection in case of exceptional circumstances or in case of notified goods. So with respect to some goods or in exceptional circumstances, they may waive off the interest. They have that power. Okay. This is about section 61. That is, already we saw it in summary form as to what is the period for which it can be deposited and what is the interest. That is given in section 61. Then valuation in case of warehouse goods, we discussed it in types of customs duties. We discussed that in types of customs duties. What is that? So that is, what are the different situations I told you. If goods are deposited in warehouse and it is sold to a person, so we need to take the transaction value at which goods are sold, or we need to take basic customs duty, assessable value plus basic customs duty plus social welfare surcharge, whichever is higher, and on that we need to calculate IGST. And suppose if it is sold to many people, then the last purchase price should be taken as the transaction value, or assessable value plus basic customs duty plus social welfare surcharge, whichever is higher, should be taken. So this already we discussed, and I shared that example also, chart related to this. It is already there in the Google Drive, which I have shared with you all. Okay. So therefore you can check that warehoused goods. What is the computation, valuation in case of warehoused goods? Then look into one illustration, case study number 1. This is a past exam question. X, an importer other than 100% EOU, STP, HTP, imported some goods and deposited them in a warehouse on 12/4. These goods were re-exported without payment of duty on 15/8. With reference to Customs Act, discuss whether any interest is payable under section 61, subsection 2. Whether any interest is payable here. Sir, first of all, it is other than EOU. If it is EOU, EHTP, STP, you will say no interest. I know that. There is no interest, but this is other than EOU. Other than EOU, for how many days it can be deposited in the warehouse without interest? Other than EOU, for how many days it can be deposited in warehouse without interest? Come on, respond. Are you guys there? For how many days it can be deposited in warehouse without interest? 90 days, correct? Now, what they did, they deposited them in a warehouse on 12/4 and these were re-exported without payment of duty on 15/8. Is it within 90 days or beyond 90 days, pa? Is it within 90 days or beyond 90 days? Please count the number of days. 12/4 to 15/8. 12/4 to 15/8. So in April, you take out 12 days. That comes to 18 days in April. And May 31 days. June 30 days. July 31 days. And in August 15 days. So 125 days. 125 days you kept the goods in the warehouse. Correct. 125 days you kept the goods in the warehouse. which is beyond 90 days. As per section 61, interest is payable, no doubt. However, listen, however, are you clearing it for home consumption or are you exporting? You are exporting. You are not clearing it for home consumption, you are exporting. Is there any customs duty payable on those goods? No. When customs duty itself is not payable on that goods, where from interest will come? Therefore, interest is also not payable. Pratibha Processors versus UI Supreme Court case. Pratibha Processors case. Supreme Court in Pratibha Processors case held that when customs duty itself is not payable by that person as the goods are exported and the goods are not treated as imported. So when he don't have the customs duty burden, then why he need to pay interest? Got it? So what is the logic behind it? Whenever there is no customs duty payable, even though the goods are deposited in a warehouse for a period beyond 90 days, but interest is not payable as there is no customs duty liability. So Apex Court held that when goods at the time of removal from the warehouse are fully exempt from payment of duty, the liability to pay interest cannot be saddled on a non-existing duty. Got it? Therefore, interest is not payable in this case. A very good case, very important question asked in past exam 4 times. 4 times they have asked this question for CMA final past exam. Okay. Then next, look into the next question. The assessee other than 100% EOU, STP, EHTP imported capital goods and deposited them in the warehouse. The said goods were not removed from the warehouse within the period permitted under section 61 subsection 1 clause C, that is 1 year. So within 1 year they did not clear. Subsequently, the assessee filed an application for relinquishment of title of such goods. So he made an application for relinquishment of title to such goods. Sir, relinquishment of title under section 23 subsection 2 is possible before order for clearance. For warehoused goods, relinquishment of title is not possible now, sir. That relinquishment of title given under 23 subsection 2 is not possible, but we have a separate relinquishment of title concept in warehousing provisions. Sir, again I am repeating, we have discussed 4 sections in exemption: section 12, section 13, section 13, section 22, section 23 subsection 1 and section 23 subsection 2. 13 pilferage and 23 subsection 2 relinquishment of title can be made before order for clearance, whereas the other 2 abatement and remission of duties before actual clearance. So which means we studied there that relinquishment of title is not possible with respect to the warehoused goods. Means that section is not applicable for warehoused goods, but in warehousing provisions we have a separate concept for relinquishment of title. Okay, so therefore that person filed an application for relinquishment of title of such warehoused goods. The department contended that since the assessee did not file an application for extension of warehousing period before the expiry of warehousing period, after expiration the goods could no longer be termed as warehoused goods. Therefore, assessee lost its title to the same and consequently it lost its right to relinquish its title thereto. They are telling no, they cannot relinquish the title. It was further claimed that relinquishment of title to the goods ought to have been made by the assessee before expiration of the warehousing period and not thereafter. And therefore the goods were deemed to be removed, improperly removed from the warehouse. Consequently, the assessee became liable to pay duty together with interest, fine and penalties as provided under section 72. That is, the goods are deemed to have been removed. We have Kesoram Rayan case and SBEC Sugars case. So therefore, relinquishment of title with respect to these goods is not possible, is the view taken by the department. And so yes, it is a case that requires some intervention because yes, whatever department said is true, because for them it is like warehousing period is expired, the goods are deemed to be removed, then what is the relinquishment of title? So their view is correct. But what Karnataka High Court is telling, in I2 Technologies Software Private Limited, Karnataka High Court is telling that this is not correct. It is, even though the warehousing period is expired, but still he should be given the option of relinquishment of title to such goods. Okay, that is given. In the instant case, the High Court rejected the department's contention that on expiry of warehousing period or on expiration of the extended warehousing period, the owner of the goods loses his title, also loses his right to relinquish the title, is rejected. So the department's contention is rejected. The High Court elaborated that on plain reading of 23.2, 23.2 is what? Relinquishment of title generally, and 47, 68 and proviso to section 68. So relinquishment of title with respect to warehouse goods is given in proviso to section 68. It is clear that owner of warehouse goods has right to relinquish the title to the goods at any time before the order of clearance for home consumption is made. Okay. Therefore, there is no prohibition on relinquishing the title after expiry of the warehousing period. Therefore, he should be given that option of relinquishment of title, and the department's contention is not correct. Clear pa? So first case law we saw Pratibha Processor Supreme Court case. When there is no duty liability at all at the time of clearance from the warehouse, then interest is not payable. Then I2 Technologies Software Private Limited Karnataka High Court case, even if the warehousing period is expired, till the time the order for clearance is made, so that person can relinquish his title. Then case study 3. Case study 3. Comment on the validity of the following statements. Now, don't see the answer. Don't see the answer. You need to answer this. Comment on the validity of the following statements. Goods other than capital goods. Goods other than capital goods for use in a 100% EOU. For use in a 100% EOU. Okay. Can be warehoused till expiry of 5 years. True or false? True or false? Please answer. True or false? Please answer. Please check the Telegram group. Poll you take. What is your answer? Goods other than capital goods intended for use in a 100% EOU can be warehoused till expiry of 5 years. True or false? 100% EOU. What is your answer here? Respond. False. Very good. Why? Sir, there is no warehousing period in case of, there is no warehousing period in case of EOU, 100% EOU. For 100% EOU, there is no warehousing period. Okay. Then next, B, interest-free period of 90 days. Interest-free period of 90 days under section 61 subsection 2 in respect of warehoused goods not intended for being used in 100% EOU commences from the date on which into-bound bill of entry with respect to the goods is presented. What is your answer? Is it true or false? They are telling the 90 days should be counted from the date of presentation of bill of entry. True or false? That 90 days should be counted from the date of presentation of bill of entry. True or false? That 90 days should be counted from the date of presentation of bill of entry. True or false here? False. Very good. It should be counted from the date on which warehousing order is passed, not on the date of presentation of bill of entry. So warehousing order is passed. Okay. Got it? And these three questions are past exam questions given with respect to the provisions so far what we have discussed. That 57 to 61. Sorry, 61 we have discussed up to that. Okay. So up to this 61, whatever we have discussed, that is this year. Got it? These questions. Now we have 62. Please see this section reference. this 62 and 63 we do not have. Control over warehoused goods and payment of rent and warehousing charges. Those two sections are not there. Okay. Because control over warehoused goods and payment of rent and warehousing charges are now omitted because those two sections are now merged with the regulations, warehousing regulations. Okay. So no need to read those two sections, but I am moving on to section 64. So up to 61, 62, 63 not there, and I am moving on to 64. Please see section 64. Owner's right to deal with warehoused goods. Already we discussed what a owner can do. He can inspect the goods, he can ensure that he can sort the goods, and he can show the goods for sale, and he should ensure that the goods do not deteriorate or damage during storage in the warehouse. Okay. So when imported goods are warehoused, the temporary possession and custody of the warehouse goods are passed to the warehouse keeper. However, the remaining titular rights of the goods vest with the owner. Thus, the owner has every access to the goods. In the course of his dealing, he is required to follow this. The only restriction in all these operations is that such operations should not cause any damage or deterioration. If the warehouse goods are so damaged or deteriorated, the value of goods depreciates. The duty leviable on goods will come down and there will be loss of government revenue due to that reason. Okay. This is 64 here. Then section 65 and 66. We can carry out manufacturing and other operations inside the warehouse. So what many people are doing, say they are into some assembly units. If they are assembly units means what? They will import the materials, components from one country and they will assemble it and they will be exporting it to another country. So there are some assembly units. Okay. So these assembly units will be converting their factories into private warehouses. Because of this, section 65 and 66 advantage, what they will do, for example, you take a situation, say I am an assembly unit, I have an assembly unit, I will be importing the components, like say I am an assembly unit of a smartphone, and I will be importing smartphones from Korea. I'll be importing smartphones, and I will be also importing these cables and chargers separately. Cable, charger and all I will import separately. And what I'll do, I'll make a box. In that box I will keep the mobile, the charger and the cable, and pack it, seal it, and then export to various like other countries. Now in this case, so what will happen? I'm doing a small, like maybe some manufacturing process also I can do. I can manufacture those chargers and cables also. I'll tell you one company, Foxconn. I don't know whether you are aware of that company, Foxconn. Have you heard that name, Foxconn, before? Foxconn. Yes, correct. Apple manufacturer. So what this Foxconn company will do, Foxconn company is engaged in, it is there in Chennai. They have a factory in Sri Perumbudur, Chennai. So what they do, so they will be importing Apple phones and they are engaged in manufacture of the chargers and the cables. We have this Apple, now they are not giving charger. And they are asking to purchase it separately. But that charger will be manufactured by this Foxconn, including the cables. Whatever is required, that will also be manufactured. And what they will do, they will manufacture it here. Even the box, etc., everything is manufactured in India. And they will just keep that mobile and that cable, etc., they will box and they will be exporting. So they manufacture the cables and chargers. So not only for Apple, even for other brands like Samsung also they manufacture chargers. Okay. So these people, what they will do, if they have a separate factory, unnecessarily they need to pay customs duty. Again on export, they need to get duty drawback. Do you remember duty drawback? Section 75. Whatever is the FOB value of export, on that FOB value of export, a percentage will be given as duty drawback to compensate the burden of customs duty paid on import. So that duty drawback they need to claim. But that's a cumbersome process now. They need to make an application for duty drawback, that is shipping bill, and then they need to comply with lot of other provisions. First of all, why they want to pay customs duty? What they can do? Their factory is there that can be converted as a private warehouse. And now they can do the manufacturing activity and they can export. Not even 1 rupee customs duty they need to pay. You got it? So that is this section 65 subsection 1 says, with the permission of Principal Commissioner of Customs or Commissioner of Customs, subject to such conditions as may be prescribed, the owner of any warehouse goods may carry on any manufacturing process or other operations in a warehouse in relation to such goods. They can carry out any manufacturing process or other operations in relation to such goods. Got it? So, but who should permit here? Who should permit? The Principal Commissioner or Commissioner should permit. Then, section 65 subsection 2. Where in the course of any operations permissible in relation to any warehoused goods, under subsection 1, there is any waste or refuse. So, manufacturing is permitted. You can manufacture and you can export. Now, they have given one point. What is that? During the course of manufacture, if you get any waste and scrap, that waste and scrap, what is the treatment of that waste and scrap? A. If the whole or any part of the goods, so very, very important, because it will take time for you to understand this. So concentrate, try to listen. If the whole or any part of the goods resulting from such operations are exported, raw material imported by FG exported. Now when FG is exported and you imported the raw material, import duty shall be remitted on such quantity of the warehoused goods contained in so much of the waste or refuse as has arisen from the operations carried on in relation to the goods exported. That is, you imported raw material. Now, you exported, but there is some waste and scrap. This waste and scrap belongs to imported goods, correct? Raw material you imported, here you exported. Now, whatever waste and scrap is belonging to imported goods, correct? This waste and scrap is what? Imported goods only. Now, on that waste and scrap, whether any duty payable? No. What they are telling? The customs duty on that imported material used in that waste and scrap, present in that waste and scrap is remitted. Provided such waste and scrap is either destroyed or duty is paid on such waste and scrap as if it had been imported into India in that form. As if waste and scrap is imported into India in that form. Okay. Related to this, point number A, I gave an illustration below. Have a look into that illustration. Please concentrate. Import of steel. 100 kgs we imported here. Basic customs duty rate is 12%. Now, using that steel, we manufactured utensils and exported it. What is the quantity of export? The quantity of export is 96 kgs. What is that 4 kgs? What is that 4 kgs? Waste and scrap. Waste and scrap will be 4 kgs. Okay. Now, this 4 kgs of waste and scrap, what is the rate applicable for waste and scrap? 5%. The rate applicable for waste and scrap is 5%. What is the rate applicable to the steel? 12%. Now, that 96 kgs of utensils you are exporting without payment of customs duty. Got it? Now, whether you need to pay any customs duty on the steel imported, not required. To the extent of 96 kgs of steel imported, you are not required to pay customs duty. Why? Because the finished goods are exported without payment of duty. What about that waste and scrap? What you are doing with that waste and scrap? Such waste and scrap is destroyed. Such waste and scrap is destroyed, or you pay customs duty on that waste and scrap at the rate of 5%, not 12%. Sir, for 4 kgs value, what you imported is steel. What you imported is steel. 4 kgs, what you imported is steel. Then you need to pay 12%, but you are not required to pay 12% as per this proviso. What they are telling, you pay as if waste and scrap is imported, you pay customs duty. You pay customs duty as if waste and scrap is imported. So you pay customs duty at the rate of 5%. Then no need to pay any customs duty on the steel imported. Either this or this. What will happen when you pay this or this? The entire quantity of the steel imported, you are not required to pay customs duty. On the entire quantity of the steel imported, you are not required to pay customs duty. Is it clear? On the entire quantity of the steel imported, you are not required to pay customs duty. You understood this, or you want me to repeat it again? Please respond. So, first of all, we are importing the goods, and these goods are deposited in warehouse, used in manufacture, and whatever is the imported quantity contained in the exported quantity, no need to pay customs duty on the imported quantity, because on export we are exporting it. Whatever is the imported quantity contained in the waste and scrap, you are not required to pay customs duty on that imported quantity also, provided that waste and scrap is destroyed, or those waste and scrap you cleared for home consumption on payment of duty applicable at the rate of waste and scrap. You are paying customs duty at the rate applicable to the waste and scrap, but not at the rate applicable to the imported quantity, like imported product. Okay, clear? So this is with respect to this. Then next, look into the other part, B, 65, section 65, subsection 2B. So 2A we understood, now 2B. If whole or any part of the goods resulting from such operations are cleared from the warehouse for home consumption, then import duty shall be charged on the quantity of the warehoused goods contained in so much of the waste or refuse as has arisen from the operations carried on in relation to the goods cleared for home consumption. What is that? If whole or any part of the goods resulting from such operations are cleared for home consumption, so finished goods cleared for home consumption, then import duty shall be charged on the quantity of the warehoused goods contained in so much of the waste or refuse as has arisen from the operations carried on in relation to the goods cleared for home consumption. What is that? Please see. Look into the next illustration. We are importing steel. And 100 kgs we have imported, and it is deposited in the warehouse without payment of customs duty. Now, out of these 100 kgs, 96 kgs used in manufacture of utensils. 96 kgs used in manufacture of utensils, and in this 96 kgs we have exported and cleared for home consumption. 25% of the output we cleared for, like we exported, and 75% of the output we cleared for home consumption. So exported 24 kgs. How? 96 into 25%. 96 into 25%, we have exported 24 kgs of utensils, and 72 kgs of utensils we cleared for home consumption. When we export, we will not pay any customs duty, and when we clear for home consumption, customs duty payable on 75 kgs of the steel imported, 75 kgs of steel used for home consumption at the rate applicable to the steel. Sir, you cleared for home consumption. What you cleared for home consumption is utensils. But you don't have to pay customs duty at the rate applicable to the utensils. You need to pay customs duty at the rate applicable to this steel, 12%. Got it? Then next. Sir, why 75 kgs? Because I'll tell you how we got 75 kgs. Finished product 72 kgs per. Waste and scrap you see 4 kgs. In that 75% is what? 3 kgs pertaining to home consumption utensils. So this 72 plus that 75 kgs, you need to pay customs duty at the rate applicable to steel. What is the difference between the previous illustration and this illustration? In the previous illustration, fully the finished goods are exported. So we got an advantage on waste and scrap that either destroy it or you pay customs duty at the rate applicable to waste and scrap, so that you don't have to pay any customs duty on the steel imported. Whereas in this example, we are partly exporting and partly clearing it for home consumption. Which one? Finished product. So they are not giving the advantage of that previous case to the waste and scrap in this case. So in this case, whatever is the imported goods present in the finished goods as well as in waste and scrap, whatever is the imported goods present in the finished goods and in waste and scrap, on that imported goods we need to pay customs duty at the rate applicable to that imported goods. Okay. What about exported? We exported now. In that case, we still get the benefit of waste and scrap. What is that? Such waste and scrap is destroyed. When the waste and scrap is destroyed, or we pay customs duty on waste and scrap at 5%, then no customs duty payable on steel. Got it? Such waste or scrap is destroyed and customs duty not payable on steel, or customs duty payable at the rate applicable to waste and scrap at 5%. Simple. Now, whether you understood this illustration also? Okay. Then you are going to answer these questions. You are going to answer this question, case study number 4. These two illustrations you understood. Now you are going to answer this case study number 4. This is how the exam question will be. Consider the following cases and compute the amount of import duty, if any, payable in each case. 20,000 kgs of steel was imported and was deposited in warehouse. The said steel was used in manufacture of steel spoons. 19,800 kgs of steel spoons manufactured and 200 kgs of steel waste arose during manufacture. The said 19,800 kgs of steel spoons is exported out of India. Now, what is the amount of duty payable, if any, with respect to A? What is your answer with respect to A? What is the answer with respect to A? For 19,800 kgs, 19,800 kgs of spoons, 19,800 kgs of spoons exported. What is your answer? Customs duty payable or customs duty not payable? Customs duty not payable. What is your answer? 19,800 kgs of spoon exported. Whether we need to pay any customs duty or not? That is the first question. Then next. Now, imported quantity. Whether customs duty payable on 20,000 kgs of steel imported. Whether customs duty payable on 20,000 kgs of steel imported, yes or no? That is the second question. on 19,800 kgs of steel exported, spoons exported, we don't have to pay customs duty. We don't have to pay customs duty. On entire 20,000 kgs of steel imported, customs duty not payable. Very good. We don't have to pay customs duty on spoons exported, as well as we don't have to pay customs duty on the steel imported 20,000 kgs. Then, what is that we need to do with respect to 200 kgs of steel imported and present in waste and scrap? Present in waste and scrap. Option: destroy. B, that is sell in India at rate applicable, sell in India at rate applicable to waste and scrap, or both. What is your answer? 200 kgs of steel imported and present in the waste and scrap. Destroy that waste and scrap, or sell in India and pay customs duty at the rate applicable to waste and scrap. Both. What is your answer? Both. Both. Either this or that. Either this or that. You can do either this or that. And next one. Sir, what if this is sold in domestic market? B part. What will be your answer if in case A above, the entire 19,000 kgs of steel spoon is sold in the domestic market? Hello? Then what will happen? We need to pay customs duty payable on import of steel 19,800 kgs or 20,000 kgs. What is your answer? Just respond to that. Sir, so that is customs duty payable on imported steel 19,800 kgs or 20,000 kgs. Come on. So we need to pay on imported steel 19,800 kgs or 20,000 kgs. Entire 19,800 kgs is sold in the domestic market. Finished product, steel spoons, finished product entirely sold in domestic market. So whether we need to pay customs duty on steel imported 19,800 kgs or 20,000 kgs? 20,000 kgs. Very good. 20,000 kgs. No, others have not answered it. 20,000 kgs. That's what we have seen here. Please see. Sir, whenever you are clearing it for home consumption, whatever is the imported quantity in the finished goods or whatever is the imported quantity in the waste and scrap, both imported quantity you need to pay customs duty 75 kg. Same way, whenever we are importing and we are entirely selling finished goods in India, then for waste and scrap we will not get any advantage. So whatever is the imported quantity present in the finished goods and whatever is the imported quantity contained in the waste and scrap, on entire imported quantity we need to pay customs duty. Got it? So therefore, since the entire quantity of steel spoons are being sold in the domestic market, the import duty will be levied on entire 20,000 kgs of steel. Okay, yeah. Then next, what will be your answer in the above case if 50% of the steel spoons are exported out of India and balance sold in the domestic market? Then, with respect to 50% of the steel spoons which are exported, what is that? 19,800 into 50%, that is 9,900 kgs of spoons were exported. In that case of that 9,900, So we don't have to pay any customs duty on the imported quantity. Okay. So we need to divide that into two. First 10,000 kgs is contained in the finished product. In the 10,000 kgs, that is imported quantity used for export. How much is the imported quantity used for export? 10,000 kgs. Divide into 2. 9,900 FG. 100 kgs waste and scrap. Now on entire 10,000 kgs import, you don't have to pay customs duty. And on export also no customs duty. On this waste and scrap, you have two options. Destroy it or clear it for home consumption at the rate applicable to waste and scrap. Okay. Then remaining 10,000 kgs used for home consumption. Finished goods for home consumption. Imported quantity used in manufacture of finished goods cleared for home consumption. 10,000 kgs. Again 2. 9,900 and 100 kgs. Don't see 9,900. On entire 10,000 kgs you need to pay customs duty. So that is this. Since 50% of the spoons export out of India, duty payable on 9,900 kgs of steel import into India shall be remitted. If the proportionate waste of 100 kgs is destroyed or duty is paid thereon, as if the same was imported in imported waste form. Regarding 50% of steel spoons which are being sold in the domestic market, the import duty of steel shall be payable on entire 10,000 kgs of steel, including the waste, including 100 kgs waste. So this is how you will get question in exam related to this. A tricky area, generally students will find it difficult to understand, but you don't do that because I gave you in depth. I gave you in depth, in detail, along with illustrations and the case study. So you don't find it difficult, okay? So you can easily answer. If this question and all comes, cakewalk for you. Then section 66. So section 65 we completed, that is manufacture, at what rate we need to pay, what is the treatment, etc. Now see section 66, an interesting situation. If imported materials are used in accordance with the provisions of section 65 for manufacture of any goods and the rate of duty leviable on the imported materials exceed the rate of duty leviable on such goods, the central government, if satisfied that it is in the interest of the establishment or development of any domestic industry, it is necessary so to do, may by notification in the official gazette exempt the imported materials from the whole or part of the excess rate of duty. What does it mean? If any imported materials are used for manufacture of goods and the rate of duty leviable on imported material exceeds the rate of duty leviable on such goods. Listen, sir, that is, say we are importing steel, sir. The rate applicable on steel is high than the rate applicable on the utensils. The rate applicable on steel is greater than the rate applicable on utensils. Then what they are telling under section 66, government may exempt that higher rate and they may ask us to pay the rate applicable on utensils only. In this case, when it is cleared for home consumption, we need to pay the rate applicable to steel now. Suppose if the basic customs duty on utensils is 18%, say 15%, then it's okay, advantage. Now reverse, you see, basic customs duty on steel is 15 and utensils is 12. Now section 66 exempt the 3%. Section 66 exempts the 3%. Sir, basic customs duty on steel is 12 and basic customs duty on utensils is 15%. Then we don't have any problem because we pay customs duty only on 12%. But when the basic customs duty on steel is 15 and utensils is 12, then in that case on finished goods only the rate is less. So government may exempt that 3%. May exempt that 3%, not compulsory. May exempt that 3%. That is given in section 66. Sir, for 9,900 we should not pay duty, right? Which one? Previous question. Yes. For entire 9,900 we don't have to pay. First 9,900, not actually 9,900, entire 10,000. That's what I have given. Duty payable on 9,900 kgs of import quantity shall be remitted. Shall be remitted. Okay. If proportionate waste of 100 kgs. So actually, duty payable on 10,000 kgs. 10,000 kgs of steel imported in India shall be remitted if proportionate waste of 100 kgs is destroyed or duty is paid thereon as if the same was imported in waste form. The entire 10,000 kgs duty payable will be remitted. Okay. Understood, Mitesh? So others 66. Hope you got the clarity what it means. And next 67, 68 and 69. So what is 66 per? Simple here. Whenever you pay the rate on steel which is imported quantity, which is imported, which is greater than the customs duty applicable as if utensils are imported. If you import utensils, you would have paid only 12. If you are imported steel, you have to pay 15. Then in that case, government may exempt that excess amount. Okay. That excess amount of 3%. And they will ask you to pay customs duty only on 12% when the utensils are cleared for home consumption. Okay. Now, section 67, 68, 69 are the three options available to the importer. So, whatever is the warehoused goods that are deposited, three options are available. So, it can be taken from warehouse to another warehouse, or it can be cleared for home consumption, or it can be exported, clearance for export. Done. Now, we are discussing number 1, that is transfer to another warehouse. Section 67, 68 and 69. These three sections. 67. Whatever is the imported goods can be cleared from one warehouse to another warehouse. Whether any duty payable, no duty payable on transfer, and subsequently, that is warehouse 1 to warehouse 2. No duty payable on transfer. Whether we need to execute any ex-bond bill of entry for warehouse 1, no. Whether we need to execute any in-bond bill of entry for warehousing 2, no. You understood or not? From warehouse 1 to warehouse 2. See this here. From warehouse 1 to warehouse 2, when you are taking the goods. From warehouse 1 to warehouse 2, from warehouse 1, you are taking the goods to warehouse 2. When you are taking goods from warehouse 1 to warehouse 2, so for this transfer of goods, first, whether we need to file any ex-bond bill of entry here. No ex-bond BOE. Okay. For depositing here, whether we need to pay any in-bond BOE? No. No in-bond BOE. So not required. Bill of entry, not at all required. Whether any customs duty payable here? CD not payable, customs duty not payable. But where the customs duty payable? At the time of clearance from here, at the time of clearance of goods from here, we need to pay customs duty here. At the time of clearance from the warehouse, we need to pay customs duty. Customs duty payable at the time of clearance from warehouse 2. Now, while counting warehouse period, separately we have for warehouse 1 and warehouse 2? No. Together for warehouse 1 and warehouse 2, together warehouse period is applicable. So what is the period for which you can deposit the goods in warehouse? 1 year. So that 1 year should be counted for deposit in both warehouse 1 and warehouse 2. That 1 year should be counted for both warehouse 1 and warehouse 2. Got it? Sir, understood this or not here? Please respond. That is given here. No duty payable on transfer to another warehouse. Import duty shall be payable when goods are subsequently cleared for home consumption from the new warehouse. And warehousing period is period in old warehouse plus period in new warehouse. And whatever bond that we have executed here. So here we would have executed a bond. At the time of deposit, bond executed. Bond is executed and no need to execute a bond here. No, new bond not required. New bond not required. So there is no requirement of any new bond at this place. Okay. So that is this. Then sir, you would have filed inbound bill of entry only in warehouse 1. Only in warehouse 1 you would have filed the new one inbound bill of entry and bond you would have executed. And again at the time of clearance from warehouse 1 to warehouse 2, customs duty not payable and no ex-bond bill of entry. Again at the time of deposit of goods in the warehouse 2, no need to execute any bond or bill of entry, not required to be filed. But again when you are clearing the goods from warehouse 2, customs duty payable, and here you need to execute the ex-bond bill of entry. Got it? Here you need to execute the ex-bond bill of entry. Is it clear here? Then bond shall remain enforceable with security. This is in case of section 67. Section 68. Clearance for home consumption. Whenever the goods are cleared for home consumption from warehouse, we need to pay duty and we need to file an ex-bond bill of entry for home consumption. And what is the relevant date for determining rate of duty? Ex-bond bill of entry. Ex-bond bill of entry is the relevant date for determination of rate of duty. We studied it in section 15. Taxable event under customs. The relevant date for determination of rate of duty in case of warehoused goods is the rate of duty prevailing on the date of filing bill of entry. Okay, ex-bond bill of entry. And Pratibha processors case already we discussed. If customs duty payable is 0, then warehousing interest is also equals to 0. So at the time of clearance from the warehouse while filing ex-bond bill of entry, so whether there is any customs duty or not, we need to check. If there is no customs duty, warehousing interest is also not payable. Then importer shall ensure that the goods are cleared within the permissible warehousing period, including extension. Now very important. If no clearance till the permissible warehouse period expires, so if the goods are not cleared within that permissible warehouse period, then section 72 becomes applicable. What does it say? It is deemed that the goods are cleared on expiry of warehouse period and the relevant date should be taken as the date on which warehouse period expires and customs duty will be computed on that day. So last date of permissible warehouse period is deemed to be the date of removal and assessable value or rate of duty on this date shall be used. Done here? Got it? Assessable value. So this case, related to this case and interest computation, I am giving you one question. So have a look into that question. So that question you can see in page number 12. A very important question, a very good question. Have a look into this. So this question is related to the concept, that is warehousing period expired, how to compute the customs duty and how to compute the interest payable. Okay, see this page number 12. So I shared one PDF with you, it is there, and extremely sorry I could not provide the hard copy. Okay, so once the if you are from Chennai, you can collect from our office, otherwise take a printout. Okay, you take a printout of this here, try to have, and those who did not receive volume 2, we will incorporate that in volume 2 and we will be sending, not an issue. So those who already received volume 2, that is CMA final students. Those who are exclusively for CMA final, those who did not receive volume 2, we will incorporate this and we will be sending the book. Suppose if you have already got volume 2 book of CA final, it's okay. This extra material alone, you please take a print and keep. Okay, sorry for that. And if you are from Chennai, I'll check the possibility of delivering. If there is any possibility of delivering it to you, I'll check the possibility of that. Okay. Says, certain goods were imported in February 2018. Interbound bill of entry was passed on 14 February 2018 and goods were cleared from the port for warehousing. Assessable value was about $5 lakh. Customs officer issued the order under section 60 permitting the deposit of the goods in warehouse on 21st February 2018 for 3 months. So only for 3 months it is given. Sir, 1 year na sir. But customs officer is having power to reduce the time considering the nature of the goods. So only 3 months it is given. So when the order is passed on 21st February 2018, which means March, April, May. On 21st May 2018, the period will be over and extension of time was also not obtained. So expiry of warehousing period is on 21st May 2018. Customs officer issued notice under section 72 demanding duty and other charges. Goods were actually cleared by the importer on 28th June. So on that day only he is paying duty and he is clearing. What is the amount of duty payable while removing the goods? Compute on the basis of following information. Applicable social welfare surcharge is 10% and particulars 14.2. What is 14.2? Date of deposit. 21.5. What is 21.5? Expiry of warehousing period. 28.6. Actual clearance. Rate of exchange and basic customs duty. IGST, see the last line, IGST is exempt in this case. I want you to do this. Okay. First tell me what should be taken as the relevant date for rate. Relevant date for exchange rate. What is the relevant exchange rate? What is the relevant exchange rate? What should be taken as the relevant exchange rate? 48.3 or 48.4? Or is it 48.5? What should be taken as the relevant exchange rate? 48.3 or 48.4 or 48.5? What should be taken as the relevant exchange rate? Please respond. Please respond. What should be taken as the relevant exchange rate? The relevant exchange rate is on the date of inbound bill of entry. What is the date on which inbound bill of entry was presented? 14 February. So in case of warehoused goods, the relevant date for determination of exchange rate is the date on which inbound bill of entry is presented. That is 48.3, not 48.4. It is 48.3. For exchange rate, always inbound bill of entry. For rate of duty only at the time of clearance. Okay. Then, what is the relevant rate of duty? What is the relevant rate of duty? What should be taken? Is it 35? Is it 35% or 12% or 25%? What should be taken? What should be taken? 35 or 12 or 25? What should be taken as the relevant date for rate of duty? Generally, expand bill of entry. But in this case, what we should do? Generally, expand bill of entry. But in this case, what we should do? Take 12%. Very good. Why? Because when the goods are deemed, to be cleared on expiry of warehousing period, on that day, whatever is the rate, that should only be taken. So therefore, we need to take 12%. And we will do the computation. So for rate of exchange, we will take, for exchange rate, we will take 48.3. For exchange rate, we will take 48.3. And for rate of duty, we will take 12%. For exchange rate, we will take 48.3. And for customs duty rate, we will take, rate of duty will take 12%. Now, $5 lakh into 48.3. 5 lakh dollars into 48.3, 2 crore 41 lakh 50,000 assessable value. On that basic customs duty at the rate of 12%, that is 28 lakh 98,000, social welfare surcharge 10%, 2 lakh 89. So total customs duty payable 31 lakh 87,800. Now, interest will be computed from when to when? Interest computed from when to when? So on expiry of 90 days from the date of warehousing order. What is the date of warehousing order? Warehousing order is 21st February. So 28 minus 21st. So 7 days in February. 7 days in February. Then 31 days in March. 30 days in April. And 22 days in May. So 22 days in May. So 22nd May. Till 22nd May, 90 days is 22nd May. So from 23rd May is only 91st day. So 91st day is from 23rd May. 23rd May. Till the date of actual clearance. Sir, interest is not computed till the date of deemed removal. Till the date of actual removal. What is the actual removal? What is the actual removal? What is the actual removal? Till that date it should be counted. What is the date of actual removal? 28/6. So 28/6. Count up to 28/6. How many days? Count up to 28/6. How many days? 23/5 onwards. So therefore in April, May 31 minus 22. That is 23 also should be counted. So 9 days in May. Then June 28. Therefore 37 days. 37 days. So how we got 38 days? Any mistake we did in the days computation? 90 days from the date of warehousing order. Warehousing order is given on 21st February. So therefore 7 days in February. Then March 31 days. April 30 days. Minus 90. So 22nd May is the 90th day. So 91st day is 23rd May. Correct. So 23rd May to 28th June. So May 31 days minus 22. We get 9 days in May. 9 days in May. June 28 days. 37 only. Sorry. It is 37 days. It is 37 days. 91st day is 23 May. Actual date of removal is 28 June. So therefore 37 days we should calculate. So compute the interest. 31,87,800 into 15% into 37 divided by 365. So 48,472. 48,472. I will rectify this and I will upload. Okay. I will again re-upload it after rectifying this in the Telegram group. You can keep it for reference. I will rectify this error and I will upload. Okay. So this is how we need to calculate interest. So whether you understood this question here, case study 5. Now, only related to interest computation, I have given one question. See the last one. Vipul imported. Question number 7. I want you to compute the interest, amount of duty and interest payable. Come on. Try the answer for this question here. Same type of question. This is the past exam question. The previous one what we have discussed is ICMA study material question. Whereas this is past exam question. Try. Vipul imported certain goods in December 2018. A price the duty bond bill of entry was presented on 14 December. And the goods were cleared from the port for warehousing. Assessable value on that date was $1 lakh. The order permitting the deposit of goods in the warehouse for 4 months was issued on 21st December 2018. Vipul deposited the goods in the warehouse on the same day. but did not clear the imported goods even after the warehousing period got over on 21st April. So order permitting deposit of goods is 21st December. So count 4 months. Jan, Feb, March, April. 4 months expires on 21st April. A notice was issued under section 72 of the Customs Act demanding duty, interest and other charges. Vipul cleared the goods on 14 May. Compute the amount of duty and interest payable by Vipul while removing the goods on the basis of following information. No other customs duty is payable except basic customs duty. So first you need to see what is the relevant date for determination of exchange rate and then rate of duty. For exchange rate we need to take 65.20 should be taken as the exchange rate. Date of deposit of goods into the warehouse. For rate of duty, expiry of warehousing period, that is 10% should be taken. So convert it into Indian rupees. How many dollars? $1 lakh. 1 lakh into 65.2. That is 65,20,000 is the assessable value. And we have basic customs duty plus social welfare surcharge into 11%. 7,17,200. That is basic customs duty plus social welfare surcharge. Always social welfare surcharge will be there. Okay. So 7,17,200. Now interest needs to be computed. Sir, 90 days from the expiry of from the warehouse order. You need to calculate 90 days from the warehouse order. What is the warehouse order? The warehouse order is 21st December. So therefore 31 minus 21, we have 10 days in December, 31 days in January, 28 days in February, and in March we have 21. So 21st March, so therefore interest counted from 22nd March. Interest counted from 22nd March. Okay. So 22nd March to till the time actually it is cleared 14th May. So this way also we can calculate, or total number of days you calculate minus 90 for the balance also you can do. What is the total number of days? So in December 10 days. In December 10 days. From 21st December to 31st December. Okay, fine. So number of days we are counting. From 21st December to 31st December, 11 days. Jan, 31 days. Actually, here we should have taken, see, we have to count 90 days from the date of order. Means 21st December should not be counted. So therefore, 10 days only. 10 days only. Jan 31, Feb 28. March 31, April 30, May 2028. May when it is clear, 14th May. So 144 days. 144 days minus 90. So 54 days we need to compute. So for 54 days, what will be the interest? For 54 days, what is the interest? We need to count 7,17,200 into 15% into 54 divided by 365. That is 15,916. 15,916 will be taken as the interest here. 15,916 will be taken as interest. Okay. So I gave you two ways of computing the interest. First you can calculate up to 90 days. Then from 91st day till the time we actually clear, we can calculate. Or from the date of order, you count, that is excluding the date of order, till the date of clearance, you see total how many days. From that minus 90 days, for the balance days you need to calculate interest. Okay. Anyway you can compute. So we completed up to section 68 for today, and there is one proviso to section 68 which we have not discussed. That is relinquishment of title. Please see that. We will complete section 68 fully. What is that? Relinquishment of title we have under proviso to section 68. What is it? Relinquishment of title? That is whenever you have the warehoused goods, that warehoused goods title you can relinquish, so you don't have to pay customs duty. When you don't have to pay customs duty, even warehousing interest also will be zero. Pratibha process case. Okay. When you relinquish the title, customs duty payable will be zero. So warehousing interest is also zero. And whatever bond that you have executed shall be cancelled and discharged. Whatever bond that is executed shall be cancelled and discharged. Understood or not? So this is with respect to that. Why bond executed is cancelled? Because you paid the duty. When you pay the duty, whatever bond you have executed will be discharged. So therefore, we discussed today up to section 68. That is type of warehouses, and then warehouse period, and then manufacturing process in the warehouse, and then so clearance from the warehouse. From one warehouse to another warehouse, what is the procedure? What is the consequences? And from warehouse for home consumption, what is the consequences? Now 16.9, that is clearance for export. From the warehouse, we can clear the goods for export, and in that case, when we are clearing for export, no duty is payable, no customs duty payable on import. On import, no customs duty payable, because first of all, there is no import as per section 12, because import is only when the goods crosses the customs control, customs barrier. So in this case, the goods are imported, kept in a warehouse, so still it is under the customs control. From there it is exported, so therefore we don't have to pay any customs duty, and so therefore export bill of entry is not at all required. However, in case of commercial export, shipping bill or bill of export shall be filed. Shipping bill or bill of export shall be filed. Normal exports. In case of postal exports, so label or declaration will be filed. Okay. Then always customs duty here is what? 0. So therefore, when any warehousing interest is payable, no. Warehousing interest is not payable, because on those goods, whether any customs duty payable, no. So then warehousing interest also 0. Pratibha processor's case. And suppose if export duty is payable, then warehousing interest shall be computed. Got it? Sir, exports may be subject to duty, na? Exports may be subject to duty, correct or not? Some exports are subject to duty. When some exports are subject to duty, then in that case, so warehousing interest will be applicable. This is special point. This is the special point. If export duty is payable, then warehousing interest shall be computed. Okay. Then export to nearby countries from where they are likely to be smuggled back. That is, generally, in case of duty drawback, we have come across this. Goods are imported and taken to outside India. Goods are imported from various countries, taken to the border, neighboring countries, and treat it as export, and we will pay customs duty on import, that we will get as a duty drawback refund. Again, when we are, taking to the neighboring countries, so it will enter into India back. It will come back, and therefore literally there is no customs duty on these goods. Like that, what we can do, we can import the goods, keep it in the warehouse, and then take it to the neighboring countries, and it may enter into India, so that there is no customs duty. So in that case, what central government will do, in respect of any goods, may notify no export without payment of customs duty on import. They will tell. So in that case, when you are exporting to the neighboring countries, when they are of the opinion that, so you may, when they are of the opinion that you may bring it back to India, so then what they will do, they will say first pay customs duty and then only you export. Or export without payment of customs duty on import subject to additional safeguard compliances. Or they may add some more compliances. Hope you understood what I am telling. That is, when goods are imported, on that customs duty needs to be paid. In duty drawback, we have come across one situation. If goods are imported and on which customs duty is paid, when you are exporting it to neighboring countries which are likely to be smuggled back, duty drawback will not be granted. Like that, there is another way. You can import the goods, don't pay customs duty, deposit the goods in a warehouse. From there, you export to the neighboring countries. From there, you bring it back to India. So in that case also, there is no customs duty. Whenever a person is found to be done that way, so central government will notify that he should export only upon payment of customs duty on import, or they may add some additional safeguards, compliances, conditions, etc. Okay. So that is this. Next, importer shall be ensured that goods are exported within the permissible warehousing period. Of course, it should be exported within permissible warehousing period. Otherwise, what will happen? The goods are deemed to have been cleared and customs duty payable will come. And whatever bond that is executed will be discharged and cancelled once the export happens. Now say this. If no clearance till the permissible period expires, section 72 becomes applicable. Exporter then make a request for extension of the warehousing period. Officer shall allow his request for extension. Post extension, goods can be exported. Okay. So this export is not export within the permissible warehouse period. Means what? Customs duty would have been paid. Customs duty is payable. Customs duty is payable. Customs duty is payable. Customs duty payable upon expiry of warehouse period. Okay. Then after export, what will happen? After export, customs duty paid can be availed as duty drawback. After export, customs duty paid can be availed as duty drawback. You understood what I am telling? That is, so within the permissible warehousing period, if you are not exporting and you did not seek any extension, upon expiry of warehousing period, the goods are deemed to have been cleared. So we need to pay the customs duty upon expiry of warehousing period. Then when you are exporting, so whatever customs duty you have paid, you can get it as a duty drawback. So not fully, 98%, 74. As per section 74, only 98% of the customs duty paid we will get as a duty drawback. Okay, that is this. Then section 70. So we completed that section 67, 68 and 69. So from warehouse it may be taken to another warehouse, or it may be cleared for home consumption, or it may be exported. Okay. Then section 70. Allowance in case of volatile goods. What is the allowance in case of volatile goods means? Sir, we imported some goods, and at the time of import, the quantity imported is say 1000 liters, and we kept it in the warehouse. In warehouse, some evaporation may happen. Naturally, natural loss will be there, evaporation loss. Now, in that case, should we pay customs duty on the quantity imported originally 1000 liters, or on the quantity what is there available at the time of clearance? Say at the time of clearance, 1000 liters have come down to 980 liters. So 20 liters is evaporated. So now whether we need to pay customs duty on 980 or 1000. Okay. For that only section 70 is given. Any notified warehouse goods at the time of delivery from the warehouse are found to be deficient in quantity on account of natural gas. Deficient in quantity on account of natural loss. ACDC of customs may remit the duty on such deficiency. Got it? And this section applies to such warehouse goods as the central government, having regard to the volatility of the goods and the manner of their storage, may by notification official gazette specify how much will be given, how much will be permissible, etc. So that will be given by the notification official gazette. Okay. Then section 71. Removal of goods from the warehouse only for certain reasons. For what? Either for clearance for home consumption, or for export, or to another warehouse. Apart from that, you cannot clear the goods in the warehouse for any other purpose. Okay. Then goods improperly removed from the warehouse. That is, if you are not removing the goods for the purpose specified in section 71, for these three purposes, apart from these three purposes, for anything else, if you try to remove, means what? You are trying to go to the warehouse and without filing any expunged bill of entry, so those goods are taken from the warehouse. Okay, that is contravention of section 71. Or not removed the warehouse goods within the permissible warehousing period. Okay, neither cleared for home consumption or export, or duly accounted for the satisfaction of the customs officer, means what? The goods are destroyed. But it is not properly justified as to how it got destroyed. Okay, that is, goods are just destroyed. That is, goods are destroyed in warehouse. Goods are destroyed in warehouse, but proper justification but proper justification not provided to customs officer. Proper justification not provided to customs officer. Okay, so goods are destroyed in the warehouse here, but proper justification is not at all provided to the customs officer. The proper officer may demand, and the owner of such goods shall forthwith pay the full amount of duty chargeable on such goods, along with interest, fine and penalty payable on such goods. Okay, so proper officer may demand, and the owner of such goods shall forthwith pay the amount. Got it? So that's what I told you. So whenever the warehouse period is expired, immediately the customs duty is payable. Okay, so or whenever the goods are destroyed but it is not properly accounted to the customs officer, then also immediately the customs duty is payable on that goods. And if the goods are removed in contravention of the provisions of section 71, then also customs duty payable. Got it? And what will be relevant date for determination of rate of duty? This case I told you, Kesoram Rayan case and SBEC Sugars case, that is, Supreme Court held that the relevant date for determination of rate of duty is the date on which goods are improperly removed. That is, for example, expiry of warehousing period on expiry of warehousing period. Suppose if the person fails to pay, if that that person who deposited the goods in warehouse fails to pay that customs duty, then the proper officer may, without prejudice to any other remedy, cause to be detained and sold. Cause to be detained and sold after notice to the owner such sufficient portion of his goods, if any, in the warehouse as the said officer may deem fit. What is that? That is, those goods may be disposed of and subject to giving notice. This is like disposal of goods by the customs officer. So whenever the imported goods are not cleared within the time limit and the goods are under the custody of a custodian, those goods can be disposed of not by customs officer like that. So here also, whatever goods that are there in the warehouse, so those goods may be disposed of and adjusted towards the customs duty payable. And this question already we have discussed. We have warehoused goods removal regulations 2016. So what are these regulations for? Whenever the warehousing order is passed by the customs officer and he will execute a bond and he will file an in-bond bill of entry. So what is the procedure for clearance of goods from the customs port or airport to the warehouse and thereafter clearance? See that. Where the warehouse goods are to be removed from one warehouse to another warehouse or from warehouse to a customs station for export. Sir, only for clearance for home consumption, ex-bond bill of entry. But in the other two cases, there is no need of ex-bond bill of entry. Correct or not? Ex-bond bill of entry to be filed only for clearance of warehoused goods for home consumption. But we have other two cases. What is that? Clearance to another warehouse or export. So we don't have to file any ex-bond bill of entry. But a request should be made in a prescribed form for transfer of goods from one warehouse to another warehouse or for export. Conditions for transport of goods. Where the goods are removed from customs station of import to a warehouse. So from where? Port or airport to warehouse. Or from one warehouse to another warehouse. Or from the warehouse to the customs port or airport for export. Okay. The goods shall be under one-time lock. Got it? So all these movement of goods are actually without payment of customs duty, correct? All these movements are without payment of customs duty. Sir, if you are clearing it for home consumption, you pay customs duty. No lock and all is required. But when you are clearing the goods from one place to another place, from where to where, if you are clearing the goods from customs station of import to a warehouse, so no customs duty paid. One warehouse to another warehouse, no customs duty paid. Again, warehouse to port or airport for export, no customs duty paid. It should be under a one-time lock. Affixed by the proper officer or licensee or bond officer. Done? So this is like, usually there is a security lock, and that one-time lock, it is based on password only it will open, but that password will not be known to the importer or the transporter. So affixed by the proper officer or licensee or bond officer, as the case may be. However, principal commissioner or commissioner may dispense with the condition of one-time lock and allow transport of goods without any one-time lock, having regard to nature of the goods. If the goods are such that it cannot be transported in a truck by fixing a one-time lock, or those goods are such that the officer is permitting, okay, one-time lock is not required, or the manner of transport, all these things, so then in that case it is not required, that is the one-time lock is not required. Okay. Acknowledgement of receipt of goods at the destination to be produced by the owner of the goods, that is, owner of the goods shall produce the proper officer at the customs station of import or the bond officer within 1 month an acknowledgement issued by the licensee or the bond officer of the warehouse. So warehouse keeper will be giving one acknowledgement that the goods are received. So that acknowledgement should be submitted to the customs officer within 1 month. Okay, from the date of within 1 month from the date of order of warehouse. Okay, acknowledgement issued by the licensee or the bond officer of the warehouse to which the goods are being removed or proper officer at customs station of export, as the case may be, stating that the goods have arrived at that place. Suppose if the owner fails to give that acknowledgement, provide that acknowledgement, then he shall pay the full duty, because there should be some evidence that the goods reach the warehouse and the warehouse acknowledgement needs to be given to the proper officer. Okay. Then next, what is this one-time lock? Where the goods are removed from the customs station of import for warehousing, the proper officer affixes a one-time lock, I told you, on the container means of transport. So only in case of, if it is open trucks, one-time lock is not possible. Only when it is a closed truck, then one-time lock will be made. The serial number of one-time lock along with the date and time of affixation needs to be endorsed on the bill of entry. Amazing point. Why? Sir, customs officer is fixing one-time lock. What I will do, I will break that one-time lock. And I will take the goods. Then again buy a new one-time lock and I will fix it to the container. So customs officer feels like the goods are stolen away, but there is a lock. So importer has not tampered with it. So that's why for every one-time lock a serial number will be there. Like every mobile will have an IMEI number, na? Like that every lock, one-time lock will have a serial number. That serial number will be entered in the bill of entry. So therefore, if you break that one-time lock and fix a new one-time lock also, so the serial number will change, because for every one-time lock there will be different serial number. Okay. So therefore, depending upon that serial number, they will also verify. So that serial number will be mentioned in the bill of entry. See this. The serial number of one-time lock along with the date and time of its affixation needs to be endorsed upon bill of entry for warehouse and the transport document. Then, all customs station are required to maintain records incorporating the number of the one-time lock, bill of entry, truck number, container number, date and time of fixing the one-time lock, and name, designation and telephone number of the officer affixing the one-time lock. So therefore, port, that is, let it be port or airport, wherever it is, goods are cleared from that place to warehouse, this needs to be maintained. Okay. And a similar procedure has been provided under these regulations. However, the principal commissioner or commissioner of customs may permit movement of goods without fixation of one-time lock. So example, liquid bulk cargo. So when the cargo, imported goods are in liquid form, or over-dimensional cargo, like it is a very big one, so it cannot be transported in a closed truck like that. Then next, transfer of goods to another warehouse. So far what we have discussed is for movement of goods with one-time lock. And so here, with respect to warehouse, public or private warehouse and special warehouse, so what is the procedure for transfer of goods to another warehouse? Say this. licensee shall transfer warehoused goods. That is, warehouse keeper may transfer the goods from one warehouse to another warehouse only when the owner of the goods produce the form for transfer of goods bearing the order of the bond officer permitting the transfer. So customs officer should permit. So only then the warehouse keeper should allow the goods to be transported from one warehouse to another warehouse in case of public warehouse and private warehouse. Whereas in case of special warehouse, the warehouse keeper shall transfer warehouse goods to another warehouse only with the permission of the bond officer on the form for transfer of goods. Okay. So here, so if the officer permits, that form needs to be submitted to the warehouse keeper, where in public and private warehouse. Whereas in case of special warehouse, so permission will be given by the officer to the warehouse keeper. Only then it can be done. Then second, after the goods are removed and loaded on means of transport, the warehouse keeper, licensee here is warehouse keeper, would affix a one-time lock to the means of transport, endorse the number of one-time lock on the prescribed form, and one copy of these documents to be delivered to the customs officer and record the removal of the goods. What they need to do? First, they need to fix a one-time lock, and the serial number of that one-time lock should be mentioned in the form, and these documents should be given to the customs officer and should maintain the records of all these removal of goods. Whereas in case of special warehouse, once the bond officer permits removal of goods from warehouse, that warehouse keeper in the presence of bond officer, because I told you what type of control we have in case of special warehouse. In case of special warehouse, we have physical control. Whereas in case of public and private warehouse, we have records based control. In case of special warehouse, we have physical control. So under the supervision of the customs officer, the goods should be loaded and a one-time lock should be affixed. Then every warehouse keeper, what are the compliances to be followed by a warehouse keeper? Every warehouse keeper shall file with the customs officer. Here bond officer means customs officer who permits. So in this place, who is the bond officer? Because we have come across bond officer, etc. Who will be called as licensee? Licensee is warehouse keeper. So who will be called as licensee here? Licensee is warehouse keeper. Licensee is warehouse keeper. Licensee is warehouse keeper. Whereas bond officer is customs officer. Bond officer is customs officer. Licensee is warehouse keeper and bond officer is customs officer. Okay. Now that every warehouse keeper, what is the compliance to be followed by a warehouse keeper can be asked as a short note question. That is, a warehouse keeper shall file with the customs officer a monthly return in a prescribed form of receipt. What goods are deposited? Receipt of goods and storage of the goods, operations, if any manufacturing operations are done, or removal of goods from the warehouse. Okay, the details of goods within 10 days after the close of the month. Means what? Monthly return will be filed, and that monthly return will be by 10th of the month following every month. However, such return shall be furnished on or before 10th day of the month immediately preceding the month in which the warehousing period would expire. Okay, what is that? Within 10 days after the close of the month to which such return pertains, such return shall be furnished on or before the 10th day of the month immediately preceding the month in which the warehousing period would expire. So what does it mean? That is, suppose if the warehousing period is going to expire, then so 10th of the month such return shall be furnished on or before 10th day of the month immediately preceding the month, before month in which the warehousing period would expire. So next month warehousing period is going to expire. So preceding month, that is this month, by 10th itself we need to intimate so that the customs officer may initiate recovery of the customs duties for that purpose. Okay. So this is in case of warehouse keeper, what are the regulations for that? Then, so we have a case study on that. Explain the validity of the following statements with reference to warehousing provisions. The proper officer is not authorized to lock any warehouse with the lock of the customs department. Not valid. So special warehouse will be under the physical control of the customs department, customs officer, special warehouse. So special warehouse will be under the customs lock. Okay. Then B, the commissioner of customs appeals may appoint public warehouses wherein dutiable goods may be deposited. No, it will be by principal commissioner or commissioner, not commissioner of customs appeals. Then the commissioner of customs or principal commissioner of customs is not required to give a notice to the licensee while cancelling the license of a private warehouse. No, that is private warehouse. Yes, private warehouse, no need to give any notice. Public warehouse, they need to give. Private warehouse, if he has contravened any provisions, yes. So the commissioner of customs or principal commissioner not required to give any license, not required to give any notice for cancellation of license if it is a private warehouse. See, because other goods are not deposited, only that person's goods are deposited. If other goods are deposited, then a notice needs to be given. Okay. Then, so question number 7, we have already discussed related to this. Okay. So with this, we completed warehousing provisions here.